what can do that? Let's just think. Okay, let's go and think what can be a strong catalyst that allows the value of a dollar to reach those points. I think we need to go and understand them, right? And one thing that I will tell you is that, like, as long as the dollar is rising in value, there is no way that we're going to see an increase in the value of stocks. It just does not make sense. You understand? Okay, guys, you understand? Okay, look at it from this, right? Look at it from this. I'm going to give you a clear example, right? Okay. So now, I'm going to give you a clear example. Okay. The value is just an example, guys. The Champions League cost $400, right? $400. That's it. It cost $400. $400. In 2018, no, when did it become $400? I think it was when, March. No, sorry guys. I think it was 2021, last year, or is it this year? I think it's this year. Okay. $400. Let's say it's this year, right? Beginning of this year, it costed somewhere around 5.5 rands, right? You see this? I'm showing, guys, I'm just showing you. It's just an illustration, please. I'm not selling something here. I'm just making an illustration. $400, 5.5, right? Now, this is January, right? 5.5. Now, you get to October. The price is still the same. Are we okay? Still $400, but the cost, it's 7,000. You get it? Do you get where I'm going with this? So now, that means that the pricing itself is still the same, but the exchange of it has been badly affected. Therefore, the very same dollars, right? This is what that means that the amount of money that you have, it's unable to. If you used to buy it for 5.5, now you buy it for 7,000. This is inflation. You get where I'm going with this? Because your money no longer has the same buying power that it used to have in January. The buying power reduced. The salary remains the same, but the things continue to increase in value. So now you are when we're talking about stocks, people, if you're buying stocks, the price of $1 is going to tell you how much you're going to buy. What is the buying power behind that? So now if the dollar continues to rise in value, therefore it diminishes the amount of money that you have. Automatically, you cannot consume more units than you did in January. You get it? I try to make it as simple as possible. So now, picture this, ne? I'm just saying, picture this. This is a company called, listed at more on S&P 500. It's in there. It's S&P 500, right? S&P 500 has this company. This company, its shares, they go for $400. You're shining. In January, you are able to. So let's say you earn 20K a month. You earn 20K per month, right? It's in rand, not dollars. With 5.5, you are able to buy at least 3. We're talking shares now. Let's say 3. You're able to buy out of 10. Let's just say out of 10, you are able to buy 3 shares in January. Come October, you're able to buy 2. This is what we call diminishing marginal utility. The more, based on price, right? The more the price of a specific goods increases, right? You are unable to attain more of it. Therefore, at each and every price level, right? The marginal utility, when it exceeds price continue to push to the upside, but it will get to a point whereby now the price itself exceeds the marginal utility. That's when you're going to start to see a drop in the value of that specific asset. Are we okay with that? Did I make it easier or difficult? I was trying to simplify it. So I used this illustration to show you that, like, you never know. So there's someone who got into the team, paid 400, and it was even cheaper than someone who joined the team this month. Is those things that I'm using this as an illustration, not as, I'm just showing you the buying power reduces as the good increases in value. Therefore, the amount of money that you have, your income purchases fewer things. And this thing is going to occur. So now tell me, why would the value of stocks rise while people cannot afford to buy multiple stocks? Not even multiple stocks, let's say multiple shares. They can't buy more shares than they did previously. So why would it increase? The only logical thing that you should think of is that, like, if the value of a dollar reduces in value, therefore this specific person is able to purchase more of this unit. He's able to consume more of this unit because the reduction in the value of that specific asset, coupled with his income, he's able to afford based on the reduction of the mode of exchange, isn't it? Because if the dollar reduces in value, the price, because the exchange is done in dollars, it has to reduce. Are we okay? And one of the things that we have seen when it comes to the Feds, right? Their main objective is simple: reduce demand, right? When you reduce demand, you kill the supplier. The supplier is forced to lower his prices. He has no choice. That's one thing that we saw. When was that? 2020. Yeah, guys, time moves fast. 2020, we saw oil. No, American, I respect it, as you know, they know how to play the games, these guys. I'm not gonna lie. No, yes, please, man.